So far, we have done in the cycle the following. We got the documents, then we did the journals. Then the journals we summarized in a trial balance. That's what we've done up to now. Everybody sharp? Now, can you see we do that every month? So in other words, if my year starts the 1st of January, I will do that. January, February, March, April, May, June, July, August, September, every single month. So I will have, at the end of my financial year, I will have 12 CRJs, 12 CPJs, 12 DJs. And as you sit here now, you can already do basic books for a shop or a business, because that's basic accounting. Right. Now we get to month 12. So do you agree with me that if I look, I just want to show you, if I look at a trial balance, okay? You don't have to page around, I just want you to show you that this trial balance, if it is the last month of my year, this trial balance is most now a summary of all 12 months. Okay? In other words, if I had sales, it means that for the year, my total sales was 191,800. You get me? Okay. Now because this is my number 12 trial balance, usually I will just say trial balance of this business on the date. Right. Now, when I get to trial balance number 12, I change the name. I say it's a pre-adjustment trial balance. Pre meaning before. Meaning the pre-adjustment happens before the adjustments. Now, what is an adjustment? Adjustment is basically, if I have my trial balance, I set up trial balance number 12, and then suddenly I decide I'm going to write off debtors after I set up this trial balance. So any transaction that happens after this trial balance has already been set up is called an adjustment. Okay? So now it means this trial balance is going to change again. Okay. Now, I see here's a mistake. Let me just fix that before the time. Okay. So now, can you see I have a pre-adjustment trial balance, which is just your trial balance number 12, that we give another name. Okay? Then we do adjustments. Then we set up another trial balance. Oh, sorry, this is right. Don't change it, it is right. Then I set up a post-adjustment trial balance, meaning after I did the adjustments. Okay? You guys get it? Then I do closing transfers. So that's what I'm going to do with you now. I'm going to start backwards. I'm going to teach you closing transfers. Okay. Then I set up a post-closing. Can you see? After the closing transfers. And then I do an income statement and a balance sheet. And then I do analysis. And this is the work we're going to do term 3 and 4. Okay. So, let's start with closing transfers. So, what is a closing transfer? Now, can you see what it says? I'm going to close something and I'm going to transfer something. Okay. So, what am I going to close and transfer? Basically, my owner's equity. And what is my owner's equity? What accounts is owner's equity? If I do my AOL, what is owner's equity? It's most your capital, it's your drawings. And what else do you classify under owner's equity? Income and expenses. And if you quickly think about it, what's the difference between an income less expense? What's the income minus expense? It's your profit. And can you see then, if I look at that, it gives me what the owner is interested in. The money he gave, the money he took, the profit he makes. So can you see then, in the end, I can see how his investment grew. What is important to actually remember is that drawings is just the owner taking from his profit. He's just making his profit less by taking. Ne? You guys with me? Okay. So, before I start with all of this, I just want to quickly go here. If you see income statement, balance sheet, what I want you to look at is this financial year. So far in our lives, we talk about a calendar year. So a calendar year is the one we sang since preschool. January, February, up until December. Ne? That is what we call a calendar year. But a business does not necessarily do his business year the same time. Okay? Because just think about it. You just saw how many things we do the end of the financial year. Ne? Do you want to sit and do that in December? A lot of people would rather go on holiday because actually a lot of your building and mining companies close 16 December, right? So what they do is they have what they call a financial year. It's still 12 months, but it can go over 2 calendar years. In other words, let's say, so most businesses have their year starting 1st of March. Now let's say my financial year starts 1st of March 2025. If I count 12 months, I have March, April, May, June, July, August, September, October, November, December, January, February. Can you see it's going to end 28 February, but in the next calendar month, or calendar year. Can you see that? But it's still 12 months. Okay. So, if I say to you, the year ends 28 February, when does it start? Oh, it started a year earlier, so it's 2025. Ne? And it would be the 1st of March. Can you see? Let's try 30 June. 30 June. When will 30 June start? So it's 2023, that's right. And it's the 1st, but it's not May. If I start 1st of May, it's May, June, July, August, September. Can you see? Then I include an extra month, then it would be 13 months. So what would be the month? July. Can you see it's the day after the year before? Let's try 31st December. That one is easy. December. December is my normal. Can you see this is the end of a normal calendar year? So it would be just exactly the same year, January. Let's do it like this. If I give you the beginning of my year is 1st April 2026. When did my year end? When will my year end? Okay, now you must go backwards now. 2025, that's right. And it would be the end of the, can you see, just before. So this would be what month? March. I don't know why I did it like this. It's confusing because it's like this, ne? So let's do it like this. If I give you, your year starts 1st September 2023. When will it end? 31 August. Yes. Okay. So let's start again. How many months is in a year? 12. So in other words, financial year, 12 months. Calendar year, 12 months. A calendar year is the one we use in our daily lives. In other words, starts January, ends December. And the year would be the same. We are now in 2026. And the whole year is going to be in 2026. A financial year is the year over which I do my books. Okay? And they don't work necessarily with the calendar year. Okay? They make their own year. So, in other words, if my year starts, my business year starts 1st September every year, it means it's going to end in the next calendar year. Does that make sense? Okay. So let's try again. If I say to you, my year ends 31st July 26. When did it start? So let's quickly think. Obviously, it's the previous year. And it will be the first. You keep doing that. If you do it a month before, then it means you add June also. Then your year is 13 months. So you always start the next day. So what's the next day? 1st of August. Let me draw. Let's start like this. Let's do it like this. January, February, March, April, May, June, July, August, September, October, November, December. Okay. So now, if I say to you, so in other words, next year is again like this. Okay, so this is 20, 25, 20, 26. Ne? So this is a calendar year. Right? Now I say to you, my financial year starts the 1st of June. Now, let's count. I'll do it in yellow. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So it will end 31st May 26. So can you see this? Let's see. So it's, what's wrong? No, I did. I did. June is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So my year would be 1st of June, 25 till 31st May, 26. Let's say I tell you, please stop talking. I tell you, your year ends 31st August 26. When did it start? Now you count back. So you say, you're wrong. Let's go back. 1, 2, 3. Okay, let me do it orange. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 1st of September. Can you see the pattern? Let me quickly say to you. Let me give you the pattern. If you say the 1st of June, so you all got the years right. That's not your problem, it's the month. So if I say 1st of June, it's going to end the day before June. So 31st May. If I say 31st May, it's going to start the day after 31st May. Because if I say to you, listen, stop it, listen. If I say to you, your financial year starts 1st June 25, it ends 31st May 26. When does it start again? 1st of June 26. Can you see? The next day the year starts. When will this year end? 31st May 27. When does the next year start? 1st June 27. It ends 31st May 28. It starts 1st June 28. It ends 31st May 29. If I look at this, it starts 1st September 25. Then it means it's always going to start 1st September. 1st September. Always. 25, 26, 27. When will it end? 31st August 26, 27, 28. Can you see? Every time that is just the next day. So that's the weird thing. The year ends, né? And the next day is a new year. So what's the difference between the new year and the old year? 1 day. Ne? You guys get it? Yes. Must I do another one? Yes. So let's do one for just to show that we are pretty. If I say to you, we start the 1st of February. When do we end? Just try it without counting. January 26. Let's see if it's right. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay. So in other words, when I start talking about financial years, you know it can work January to December, but most of the times it will work over 2 calendar years. It will include 2 calendar years. Okay. So, let's go back here. So we're going to do closing transfers. So I want you to go to, you'll see that I put in a lot of formats for you. There's a lot of pages. Don't worry about that. We'll get to it. I want you to go to page 6, where I was scratching very stupidly. It's right. It is the post-adjustment trial balance because I've already done the adjustments. I just want to teach you the format of the closing transfers. Now, when I do closing transfers is only, and you can highlight it, capital drawings, and all your nominal accounts. Okay. Yes. What? I've got here. There's, okay. So that's the only accounts I'm going to use. And I was very nice. I already opened it for you. Okay. I just want you to write the date on the top. Today is the 22nd of July. That we just keep track of where we are. Okay. So this is the general ledger of, and you can see L Stores. And can you see, and this is now something that you're going to ask me, can you see, this is post-closing, and now everything is going to be done on the 28th of February. This is the end of my financial year. Can we stop talking? This is the end of my financial year. So everything that I showed you here, is going to be done on the 28th of February. Okay, and so you will see I actually brought down the balances on the 28th of February. You see, which is weird because you used to bring down balances on the 1st. Okay, don't worry because we are working with the books on the 28th. Okay, so I already brought down all the balances. And now, if you turn the page, you'll see, oh, there's a lot. It doesn't stop. But then, you're going to see on page 9. Page 9, we have a third section. So we are used to balance sheet section, nominal section, and now we're going to have, and you can choose which one you prefer, your closing account section or your final account section. And there's only 2 accounts in it. A trading account, don't confuse this with trading stock. A trading account and a profit and loss. So in the trading account, we're going to calculate what we call the gross profit. So gross profit is basically just sales less cost of sales. So that is your pure profit that you made just by buying and selling. Sorry, that pink is okay. The profit and loss is going to calculate what we call the net profit. So gross is always before I subtract something, and net is always after. So net profit is the profit that goes to the owner. So this is when I take into account all my income and expenses. So my whole goal is now to take all of these things to these 2 accounts. So I can calculate my profits. So I'm literally going to take this account, I'm going to close them, and then I'm going to transfer them in here. So these accounts are going to have in the sales, the cost of sales, the salaries, all the nominal section accounts are going to end up here. Okay, we'll do that tomorrow.